Morning, everyone. Welcome back to another Stock Market Open live stream. Today is the first trading day of September. September, especially in election years, usually where we start to see some good old election volatility, not only in September but also in October before an election. September has also been considered historically good for bonds and bad for stocks. But just because history says one thing doesn't mean it will be. Although, if we take a look at what's going on in the pre-market, we can see the Qs have once again lost the 476 line, at least in pre-market, down about 0.5%. You've actually got Tesla up 1%, but many tech stocks actually down, including Nvidia down about 2% in the pre-market. And Bitcoin sitting under 60K again. If we zoom out back to where we left off, we can run all the way back to, let's see, where did we leave off? The second was Monday, the first was Sunday, the 31st was Saturday, so the 30th, it's been a while since we've been able to do any kind of trade or anything. What is this? What's a vacation? What's Labor Day? Actually, we had a great time. We went to one of these, it felt like a land ship. Has anybody ever been to like a Kalahari resort? It's kind of like, it's more like a water park and arcade all in one place. It was great for the kids. It was really fun. So that's why I barely posted this weekend. But anyway, we left off last week sitting at about $59,000, and frankly, that's right about where we sit right now at about $59,000. Of course, after bouncing around that 57,580 level, which we have visited many, many times. So let's take a peek at listing the order of performance here in pre-market. We've got Nvidia down just over 2%, ARM's down about 1.8, Peloton's down a bit, Enphase down 1.4, sitting at 121. Supermicro at 430, down 153 basis points. You've got AMD down a bit, 125, Monday.com 1. Going to some of the winners here. Redfin's up 4%, Lone Depot 1, short Bitcoin, short the Qs rather, mostly probably because short Bitcoin probably be flat given where it left off. And what else? That's it. Not actually that much green, barely a page of green here. Okie dokie. So, let's see here. I think we've got some catalysts coming out. Let's see here. All right. So today we have S&P Global Manufacturing PMIs, construction spending month over month, ISM manufacturing, and prices paid. We'll get all of that by 7 a.m. So we got a little bit of time for that. Then we'll have JOLTS tomorrow. Ooh. And after JOLTS tomorrow, we'll get factory orders as well as durables. Then we'll get the ADP report. And then, of course, we're leading into the jobs report on Friday. ISM services on Wednesday or Thursday as well. And then Friday, we get the jobs report. So, all right. Get some entertainment this week. That should be fun. Hopefully, everybody had a good Labor Day. Hopefully, you got a little vacation in or something like that. Let's see here. Okie dokie. Come on, HDMI cables. You can cooperate. It is okay. There we go. All right. So, let's see here. There was talk over the weekend of Volkswagen shutting some factories, potentially in Germany, which would be the first time they've ever done that, which is a little surprising. The idea of a German manufacturer slowing so much that they can't hold up anymore, and they have to start closing factories is kind of wild, and also shows that increased Chinese competition we've been seeing. China's manufacturing industry is in quite a bit of a slump to where some manufacturers in China are going bankrupt, and that's leading others to be more competitive and wanting to ensure they can get whatever business they can. But it definitely signals a competitive environment right now for manufacturing. And I think that's why you're seeing some of those stresses. All right, let's listen in over here for a moment. Let's see what they have to say. What's this Disney talk?
Monday Night Football and the importance of those football rights and the football viewership. This is going to be a very tense negotiation on both sides, with a lot of frustrated viewers ready to watch.
Who's your team?
I'm
Julia?
here in LA.
There's about 12 teams in LA. I mean, which one?
Boring. That didn't take long. Let's pop on over. See what the doomers have.
Pennsylvania is so crucial, and Josh Shapiro told me at the DNC he sees it basically practically a statistical tie right now, which is why Harris continues to go to places like Pittsburgh.
That's the latest on U.S. steel. Let's get the latest on the smartphone wars. Chinese tech giant Huawei preparing to launch a new phone on September 10th, just hours after Apple unveils its latest iPhone lineup. Sources telling Bloomberg that Huawei is expected to announce the world's first commercial-ready smartphone that folds not once, but twice. Do I need it to fold at all? Do I?
Love this story. It's like our phone doesn't fold once.
It folds twice.
It folds twice.
Do we need it to fold twice?
If you look at the actual ads, you drop it, you can throw things at it, you can, play catch with it.
It's like the Cybertruck
it's gonna
of
be
smartphones?
Fine, exactly. Take a bat to it. There's also this point about more screen space. It's sort of the latest new thing, but are we now talking about folding instead of AI? That's what I want to know.
The state of innovation. We're going back to hardware and not focused on the software. I thought this was meant to be like the moment for AI.
Didn't Apple win on hardware? Didn't they win on making it beautiful, on making it nice, and making it cool? And is that Huawei's game plan at a time?
I mean, the software is also pretty good over at Apple. It's just a little late.
I also think Huawei, especially going hours after Apple, this idea of nationalism and pride, a national giant when it comes to the smartphone maker in China.
Been a big theme for consumers in the mainland. Elsewhere, markets kicking off a shortened trading week, but there will be no shortage of data. Investors looking ahead to Friday's August payrolls report set to either confirm or deny a September rate cut. Greg Dacko of EY remaining in the cut camp, expecting a 25 basis point move in 2 weeks that will kick off 75 basis points total for the year. Greg joins us now. Greg, welcome to the program, sir. It's good to see you.
Thank you.
I'm not sure what kind of number would stop them from hiking next month. What kind of number would stop them from cutting next month, rather?
Well, I think if there were to be any signs that inflation is really accelerating and that we're seeing a labor market that's really strong, then perhaps they would hold back. But I think right now it's really a done deal in terms of the rate cut. The question is really the magnitude and the speed of rate cuts going forward. How rapid is this recalibration process going to be?
25 versus 50. We've had a few guests come on the program and say something like 100K, 125, maybe south of 100K, would nudge that to 50. Where are you on that debate?
I don't necessarily think that we have to have a payroll report that is as strong potentially as 100K to have 50 basis points. I think the 50 basis point rate cut is really going to be dependent on an environment that is much weaker than what we're seeing right now. The Fed does not want to be appearing as recalibrating monetary policy rapidly in an environment where the economy is still relatively strong. Let's not forget, if the economy is moving at a pace of about 2%, which I think is the underlying pace of the economy right now, that's not a reason to start panicking and cutting rates very rapidly. It's a time to start recalibrating monetary policy, avoiding monetary policy being excessively restrictive. But let's not move from an inflation.
Yeah, keep in mind this week's unemployment report is actually expected to show unemployment go down to 4.2% rather than 4.3% with 160,000 jobs. Rio here in the chat says he thinks it's going to come in at 4.4%. Let's see how many people agree with him on Wall Street, and we'll get to see who's right and who's wrong. All right, let's see here. Let's go through the survey. So, survey says 165,000 jobs, 140 of those private payrolls. Unemployment rate last was 4.3, expected now to be 4.2. It must be. Let's see here. Okay, yeah, there it is. High estimate of 4.4. You have one analyst at 4.4 out of 52. And the vast majority of them seem to be at 4.2. And then some of them are at 4.3. Yeah, everybody seems to think it's going to decline to 4.2. Interesting. Wonder how much of that's already priced in. Atlanta Fed now real GDP model also back to 2.5% growth. up from 2% prior. And that was after some of the data that we got on PCE. And real gross domestic private investment growth increased from 3% and negative 2.4%, respectively. That's consumption expenditures and real domestic private growth, to 3.8 and negative 0.1. So this one is one I've been watching, this real gross private domestic investment growth. It's been bobbing between 0 and negative. And before they had negative 2.4, they had like a 0 read. And then they went negative 2.4, and then they went negative basically 0 again. So that one's been bobbing around negative, which isn't ideal as a recession indicator, but we shall watch.
You can point to the Fed being late to recalibrating monetary policy, but I would point to just before the COVID crisis. Back in 2019, the Fed was said initially, and bad communication, but the Fed said that it was on an autopilot with regards to the management of its balance sheet. Then it recalibrated by implementing 3 consecutive 25 basis point rate cuts. That was the right type of move, albeit a little bit late. I think right now what the Fed needs to communicate, now that it has communicated its views on the state of the economy and the state of monetary policy being slightly too restrictive, it needs to focus on the destination of travel, because that will determine the journey, the pace at which it eases and recalibrates monetary policy. We do not need to slash rates to 0. We just need to have monetary policy go from restrictive to neutral, given the underlying state of the economy.
Let's put some numbers on that. So it's currently 550.
While they yap about this, I want to see what do you all think? What are some of your recession indicators? What are you watching in terms of recession indicators? So I'll start with a few. You've got the SOM rule, which could get unsommed this Friday, I suppose. The inversion of the 10-2, 2-10s, whatever you want to call it. You've got the peaking of government, education, healthcare, employment following peaks in private. That's usually a tell. You've got the decline, the plateau below 5% in personal savings rate. That somewhat implies plowing through your savings, and eventually you'll have to stop. Let's see what others that you have. Obviously, we talked about the decline in real private investment, domestic investment growth to negative. See what else you have. This is advertising price. Somebody says sales at Target. I feel like they always had sales at Target though before the pandemic. Advertising prices. What happened with advertising prices? I'll give you all a little bit of time to keep writing some ideas there.
All policymakers are on the same page. You're still talking a lot about gradualism being methodical, and the drinking game is one that worries me quite a bit because we are in this environment where perhaps you may need to accelerate the pace of easing, but let's pay attention to the outlook, not so much today's conditions or last month's conditions, which tends to be the case for markets.
Greg, when you look at the destination, and you're talking about the neutral rate, but everyone's talking about the end of the year, how does the Fed look at the destination for next year when policies may be very drastic depending on who gets into the White House? I'm thinking of things like tariffs and what that means for inflation. The Peterson Institute says you could see the Fed turn around next year and start hiking again.
Yeah, that's a great question, because right now the Fed is behind the curve when it comes to current economic conditions. I think it should have been easing. We've talked in the past about my perspective that the Fed should have been easing from early this summer, not in September, but earlier in May, June, maybe even July, in terms of starting to recalibrate monetary policy. That's just catching up to the current conditions of today. I'm not talking even about the next 3 or 6 months. I'm talking about today's economic conditions. When you talk about next year, that's another step. So essentially, the Fed is 2 steps behind when it talks about calibrating monetary policy to tomorrow's economic activity. You're absolutely right. There could be a lot of uncertainty in terms of
Warren Buffett's selling. That's a good one.
Tomorrow's economy, where you could have more tariffs, where you could have an environment where there is greater influence on the Fed, where there are restrictions on immigrations that could lift inflationary pressures due to undersupply on the labor front. Those are all conditions that could materialize, but that's the unknown. The Fed does not want to bank on any unknowns at this point. It wants to bank on the known knowns and the next 3 months in terms of the direction of travel of the economy.
Greg, this was smart. It's great to catch up. Thank you, sir. Greg Decker.
Always a pleasure.
Of EY. We are about...
Well, I kind of agree with this person that the Fed should have been easing a little bit ago, and the question now is if they're not if they're easing too late, at what point do you potentially have some oopsie doopsies? That is not good. Don't want that. So, what else? What else? What else? I think I know some folks talk about delinquencies on consumer loans, delinquencies on auto loans. I like to try to pull up delinquencies on autos. So let's try to do that. Let's see. Auto loan delinquencies. And then I think what we want are FHA mortgage delinquencies. I know some people have been covering that. Very specific sets. Also business bankruptcies. Let's see if we can get a chart of that. Bankruptcies. Alright, let's see what we can get on these. Okie dokie. Alright, so here's the delinquency rates on consumer loans, which we could see has risen, but it's slow. It's the slope of its acceleration has declined a little bit. It's certainly higher than where we were pre-COVID, but it really hasn't exploded yet. Although you generally don't see that explosion until you're also about halfway into a recession. We just know we're above a prior peak, but we're nowhere near even what we saw at the, well, we're kind of around the lowest level in 2005. Credit cards, kind of a similar story. To right around the low of what we saw in 2005, but well above the delinquency rate of prior to the pandemic. Which I always think is interesting. See that that difference prior to the pandemic. And so that's credit card delinquencies, consumer loans. Seeing some work there. Let's see here. Yeah, bankruptcy filings I didn't find as useful, mostly because you're still below trend, so it's actually, somewhat to some degree bullish when you see you're below a prior trend, right? So not so bad there. Business is still holding on to some dollars, plenty of dollars there. Homes for sale in North Texas are up 300%, but sales are down 30% and dropping 10% a month, says Benjamin Nickel. Yeah, I mean, a lot of this I don't think is a recessionary indicator of what's going on. You should compare GDP versus GDI. Yeah, gross domestic income versus, yeah. A lot of what's going on with Texas real estate, and I know this because I've traveled there for house hack and just seen it firsthand multiple times, is you had this COVID effect of overbuilding, and that sort of unrestrained building with the premise that people will never stop coming to Texas is a bad idea, because now you create an oversupply. You lower the value of older homes, because why would you have an older home if you could just have a newer home? And when people stop coming in the same waves that you thought that were happening during 2020 and 21, well, now you have way more homes and way fewer buyers, and you have a correction. So it's not terribly surprised that your COVID markets are having a reversal. I don't think COVID markets reversing are a big sign of, like, a big recessionary sign. I think that those are actually just somewhat normal. Let's see here. Reason. Let's see. I'm gonna try to find the FHA delinquencies. You can get a chart of them, but they don't particularly make it useful. Foreclosure stats. Annualized foreclosure rate. It's fractional. Tiny. I'll show you what I'm looking at. I just went specifically to FHA loans. Here we could see the current delinquency rates, and they've broken above 6% on 30-day, 2% on 60, 3% on 90. That's because people sit in the plus 90 category a lot longer, so 60s usually either pay up or they go to 90 plus. serious delinquency rate, 3.84 in July of 24, which is a little bit lower than what you saw at the end of last year, actually. And these are just FHA loans, which FHA loans do have a lower credit score. In fact, that's where you see most of the delinquencies. Loans with credit scores under 500, under 600, those are your greatest delinquencies. Nominal amount of delinquencies above 720. That's not a surprise. Not a surprise. Here's the seriously delinquent rate by year. 2024 is not done yet. But looks like the highest was actually 2018. That's interesting. All right, let's hop in over here.
A big push to sign veteran engineer Adrian Newey. Newey is stepping down from Red Bull early next year after helping to create a car that's dominant on the grid.
Someone says California is overbuilt. No, it's not. It's so underbuilt.
Pulling out all the stops to try to sign Newey.
Adrian is clearly the most talented and gifted individual.
15-minute wait times at Disney World on Labor Day? Oh, that's odd. What about Labor Day weekend? Were you there on the weekend or just Monday? It'll be interesting. When we see deflation hit food, housing, and services as prices begin to drop, businesses desperate to sell the overstock at a small loss before they have to cut production. Ooh. Went to Chipotle yesterday. Asked how much queso was. She said, at 160. I said nope and kept moving down the line. Larger jobs harder to find. Construction workers complaining of no more jobs. That's true. That's an anecdote. I wonder if we could get any indicators of the construction industry. Construction industry charts. That would be really interesting. Top 23 industry trends. Let's see here. No, that's all nonsense. I'm trying to get, construction spending, construction engineering outlook. Construction spending from the census. Oh, I could chart that then. Construction spending. I do hear that from contractors as well, by the way. People are kind of freaking out. Let's do the percent change from a year ago. I mean, what do we make of this? That goes to June of 24. I don't know how lagging this survey data is. But, we've certainly been at these levels plenty of times without a recession. How often do they update this? Oh, monthly. This is updated monthly. What was, did we get July construction spending yet? We should have. July construction spending. Nope. Oh, gets released early, September. Yeah, that's interesting. Construction spending. So really, delinquency rates on consumer loans and credit card loans, those are a little up. But probably missing some more recession indicators here. On credit card. Yeah, but residential real estate seems pretty insulated right now. Somebody says a firm is going up. There's your recession indicator. That's funny. That's funny. Yeah, what are they doing today? They're up at about 43.63. Big developer in Omaha lost out on millions in business earlier this year. Hasn't really recovered. Rates and funds were his excuse to customers. There is an index for architect projects. Architect projects under contract, ABI. Let's see. Can I get this over time? Oh yeah, I can. Okay, but I want to zoom out. National Architectural Billings Index. Let's see. I'd like to get a further out chart of that. Surprisingly, the website that puts that data out doesn't give you the best chart. Architectural billings. Huh. National Architectural Billings Index. Yeah, a lot of press releases on it, but let's take a look at it here. Historical data. Here we go. Oh, here we go. History. Architectural Billings Index as a leading economic indicator of non-residential construction activity, with a lead time of 9 to 12 months. The index is derived from a survey that they do. Okay. Obviously, a decline in COVID. Yeah, we've certainly been below for really since about the summer of 23. Which we haven't been that low absent COVID since coming out of the recession. That's interesting. That is an interesting one. I wish I could grab this out over more time. Like, you know, taking it all the way back to the .com. But I don't think the data goes back that far. Yeah, everything I look at doesn't show it going back that far. Oh, here's a regional breakdown of it. That's interesting. The Northeast is positive. All the other sectors are negative. Yeah, but I'd say that's a good one. I mean, the trend is pretty clearly down. Huh. All right.
Yeah. You don't want to go too far out without having something to point to say this is why we did it. There's enough people who are probably against it on the board that they don't, unless we get a surprise on Friday.
Does the quiet period start on Saturday?
It does.
Oh, very small window for Fed speak then. Michael,
Oh, someone says construction data is released today at 2 p.m. Oh, that's perfect. Machine shops and water business has been dead for 7 months. People are not spending on luxury items for homes. Max here says 90% of our customers are contractors. The frequency of complaints for the lack of jobs has gone up substantially. Really began in July. Then TSA said they hit a record number of travelers this weekend. Well, that'd be interesting. It wouldn't surprise me. TSA travelers. Really, I don't think consumer spend is the first thing that gets hit, right? Consumer spend is like the final nail in the coffin. Let's see here. Busy Labor Day weekend. TSA. No, it said this year may be the busiest Labor Day. Okay, so what did we actually get? Yeah. Well, it'd be nice to be able to chart this. I guess I could look at archive data, but then I'd have to see when Labor Day is. I'd like someone... There's just a chart of it. Oh, there is. Did they only go back to COVID? Here's a chart of it. So they thought this Labor Day was going to be busy. But I don't think it beat... Did it beat last year? See, it didn't even beat some of the summer weekends here. In June. It's actually lower. That's fascinating. So let's go to travel numbers for 2023. And what was Labor Day in 23? Labor Day 2023. September 4th. So September 4th 3rd and 2nd then. So September 4th, we had 2.6. And then this Labor Day, also 2.6. Oh my gosh, you had, what? Oh, no, I misread it. Sorry. Oh, they give you a year-over-year comparison here. No, yeah, okay. We did beat last year. Wait a sec. Did we, though? See, look at this. This is confusing. Here, they show you last year, but they use the same date. And then when I go to the travel numbers for 2023, the 2nd doesn't have that date. The 4th has that date. I don't know, it's a little confusing. I prefer the chart. This is a little easier to see. Let's see if you could go to September. Basically what you're seeing is it's somewhat similar to where we sat today. Which, okay, fine. Probably take a little longer to see some big trend changes here. I'm a machinist. Is that how you say it? And we've never been slower. Yeah, exactly. This is a pretty common type of index where you look at a number over 60 or over 50 or under 50 for expansion or contraction.
Eyes on the
Spirit Airlines furloughed fewer pilots than expected. Oh, really? Well, that's a good news, actually. I want to look that up.
It's a 3-week win streak going into the new month. Dow touching its 26th record close of the year. Elliott now holds 10% of Southwest Common, allowing the company to call a special meeting at the carrier. And then there's Intel looking to trim down what Pat Gelsinger has.
Okay, so Spirit Airlines furloughs over 180 pilots amidst loss, but 74 fewer pilots than expected. You know, I wouldn't be surprised if some of that is just sort of like psychological for the pilots. I hate to say that. Like, I'm not trying to be jaded, but you know, the company said they were going to furlough 260 pilots, and they ended up furloughing 186. I think that could be psychological. So plan to furlough 260 pilots. Actually, oh my gosh, furloughed 186. So I'm just gonna write that down. Could be a psychological strategy. Start high, then furlough less, implying things are better, but you're still furloughing, right? So that wouldn't surprise me. That's fascinating. Okay, that is an interesting update, though. Thanks for sharing that. I'm always curious about the psychological implication of what the companies pull off with their messaging. By the way, we started a little sign-up list. It was actually inspired by y'all over at stockhack.com. And what's kind of neat about it is it's really designed to be actual financial advice. It is. And no hourly billing. No, like trying to, nickel and dime out of every message or every email for folks. But basically, actual financial advice from my team of financial advisors, like actual people in-house. It's not like I'm like outsourcing to other people. And one of the cool benefits that we think we have is that you would get the benefit of my perspectives on balancing real estate and stocks, obviously as a real estate broker and a licensed financial advisor, which we think is really rare in the financial advice business. Maybe it's not. Maybe more people advise on real estate, but we actually even got some emails from folks who were in the advisory business, and some of them were like, "This is great. Like, can we have a job? We want to be a part of this." So we thought it was kind of cool. So if you want to sign up for the interest list on it, feel free to go to stockhack.com. But yeah, it would be actual financial advice and it can come up with an actual long-term wealth plan for you, as well as helping you buy real estate, which again we think is rare in the financial advice world, and it's really consulting, right? So it's more than just invest in VOO and go buy a house. It's how do we actually get you to owning multiple properties through your income, your family situation, your credit, your retirement planning, whatever it is, right? College savings plans, you name it. So I think it's kind of cool. Insurances, business consulting, you name it. Which would be really cool. So yeah, feel free to go to stockhack.com to check that out. But that was inspired by a lot of y'all last week, so I thought that was cool. So, all right, what else here? Somebody says, WTF NVIDIA. NVIDIA. Well, it's down 2.2 right now. Q's right now sitting down about 0.6. BTC doesn't seem that bearish, but then again, BTC has sort of been it's been a bad anything lately. I think there's just sort of an illiquidity issue lately. Tesla's still holding on to about 88 bips there. Somebody here says, NVIDIA is the new Apple. It will underperform for a few days, and then the SPY follows it down. Think about all the job losses when people refused to get the job, and that was 4 years ago. Oh, that's interesting. Thanks. Brandon here says, really great deal for investors. One-time fee, small monthly fee, and small basis points fee for those who don't have time to watch the market nonstop. This is a home run. Oh, thanks, Brandon. Appreciate that. NVIDIA will hit 100 and then bounce, I think. 6 months ago, we couldn't get more than 1 or 2 estimates done on a new home build. Now we're putting out plans and we get 4 to 5 contractors bidding. Haven't seen that since 2019. Yeah, but 2019 would be a normalization, right? Like some actual competitiveness in construction. Is there a minimum holdings amount you'd require? Nope. No minimum holdings. It probably makes sense with higher holdings just because the basis point fee is smaller. But there's obviously a monthly fee component. But I mean, theoretically, if you wanted to put 0 in, which we expect to custody with JP Morgan, theoretically, if you wanted to put 0 in and you just wanted to pay for the consulting, that works too. It's really designed to build a relationship with each client over time. Like we see this as a business we can build out at first slowly to make sure we don't overwhelm the team and myself too, because I'm going to be involved in people's situations, and build that out slowly. So we're really excited about that. Look at all the real estate agents working at McDonald's. We need a stat on that. Agent to Mickey D's. Well, that's terrible. A good indicator of impending recession is the amount of fraud cases you hear about in the market. Ooh, that would be interesting. I wonder, is there a stat for that? St. Louis Fed. Or are you just sort of saying, like, anecdotally, like, you hear about, like, the Archegos fraud or whatever, right? I'm in marketing and construction jobs dropped. Yeah. That's very interesting. Oh yeah, sharp drop there on the 10-year yield. I work for a lumber mill that supplies trimmings for Oklahoma homes. We've been slow. 30-year-old homes rotten with mold and no maintenance, asking triple the price of new. Awesome. Well, I mean, it depends where you are, right? Like in a place like California, it's so hard to build. Oh, I love it when people make videos about all my different, like, the products and stuff, because there are always going to be haters. But to some extent, like, I've seen people, like, watch a hater video and they're like, oh, that's actually pretty good. Sign me up. It's kind of funny. It's like, whatever. I tell Lauren all the time, I'm like, people are going to have their comments and whatever. You know, usually what people like to do is they go, oh, but if you add up all those fees, it'd be a lot cheaper to invest in the S&P 500. Absolutely. But the S&P 500 isn't a consultant. The S&P 500 isn't walking you through building your credit, building your income, and buying a house, and buying your first rental property, and picking a property manager, and going over your final closing statement. Ask VOO to go through your final closing statement on a house for you. In a nonpartisan way, right, or biased way. It's impossible. So I think what I always find is so interesting is there's a lot of short-sightedness, and it's not the fault of people. You know, don't get me wrong. Like, one of my pilots was asking me yesterday, hey, like, which of these retirement options do you like? You know, hashtag not personalized advice. And I'm like, hey, honestly, like, the S&P 500 is great. You know, if you're worried about a recession, you can have some more cash on the sides or allocate a little bit more to bonds. If you don't give an F because you're not going to touch it for the next 20, 30 years, who cares, recession or not, just DCA, right? Like, but there's more to having a consultant than that. A consultant is like, hey, how do we bump your income? Hey, how do we get you into real estate? Hey, at what point do we want to have more money on the sidelines so we're ready for that down payment? How are we sitting with debt? Is it time to buy that new car, or is it time to wait on that new car? What about renovating your property? Is now the time to renovate your home or not? Like, VOO ain't going to tell you the answers to that. You actually need an advisor. So that's what we're doing. Or ask your realtor to do their job. So the problem is a lot of people actually like to fact check their realtor. There is a lot of people have a lot of suspicion that a realtor just wants a commission check. I actually always wanted to make sure that I came across as the opposite as a realtor. But a lot of people just want a second opinion on top of what their realtor's saying. Honestly, it's not uncommon. So, yeah. No press is bad press. That's true. Yes, actually, we did. So we actually did. I contacted multiple different. So every provincial government inside of Canada has its own, like, securities administration. But it appears there is a nationwide exemption that if you are registered in the United States and your incomes, your billings basically for advisory services for Canadians is less than 10% of the total company billings, we could be exempt. We have to file a registration exemption with each of the provinces we'd have a Canadian client in, but we can do it with our US licenses. But the downside is we can't, and there's some disclosures and stuff like we're based in the United States, not in Canada, blah, 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 all that. But one of the downsides is we can't advise on Canadian securities. Can advise on Canadian real estate, but not Canadian securities. So you're like, oh, what about this Canadian stock? You know, we're useless basically, which is fair. And we're like, okay. So yeah, but we did look into that. And we actually, everybody already knows this. The Canadians are so nice. But I called, like, it was so amazing when I called, for example, the Ontario securities admin. The first person that answers the phone, I gotta shout her out. Hold on here. Let me see if I can find it. The first person that answers the phone is like, no problem at all, sir. We have an exemption. Here's where the exemption is. Here's where the rule is. Here's what you want to look at. You'll have to check each province individually. But here, let me do you a favor. Let me get your email. We're gonna send you all the information. It was Juliet, Lead Inquiries Officer of the Ontario Securities Administration. Dear Mr. Paffra, thank you so much for your inquiry to the Ontario Securities Commission. They were so nice. It was crazy, and they were like so fast too. It was pretty cool. So very, very cool. Having a real estate advisor sounds great, especially if the property's for investment. I agree. Yeah. Hometown of Toronto is a perfect example. Out of 10 cities, by far the worst place I ever lived. Oh, somebody here doesn't like Toronto. Your thoughts on Supermicro? You know, honestly, I've always been a little bit bearish on Supermicro, and all, like, my bearishness on Supermicro is probably cost money because, like, it's like the thing skyrocketed from like $70 to like obviously a lot more. I mean, even where it is right now. The problem that I have with Supermicro is I think it's basically a meme, and the reason I think that is their margin is very, very how should I say it? Their margins are very low, and they're basically a commodity. I mean, anyone can undercut them. They're a server rack, and they put chips in the rack for you. You know, like a fulfillment service. I wasn't a real big fan of that. I didn't think there was a lot of big pee-pee there. Now, of course, everything momentumed up during this you know chip environment, but yeah. What are the Google search trends for unemployment? Ooh, that's interesting. I like this. That sounds amazing. Most advisors couldn't give two shit. Well, and I want to be clear, like, most advisors, we did market research on this. Most advisors are going to, maybe I shouldn't say most because I don't have the statistics for everything, but a lot of the advisors that we researched are going to charge you an hourly fee. It's like, I think our range was like $200 to $400 an hour. And we were looking at it and we were thinking as a team, we're like, hey, do we want to be that firm that every time a client calls, like, we have to sit there. First of all, we have to manage it, right? Like, okay, bill a quarter of an hour and then send the bill out. We thought, like, that's normal in the legal business, but we thought from a consulting business that might encourage people not to call, but we actually want people to call. Like, we want people to talk to their consultant, right? So we thought that would be it would be better to have sort of just a flat sort of monthly fee. Okay, let's go with unemployment. Yeah, let's see the trends on that. That's a good idea. Okay, last 5 years. So no, you don't really have a big move here. Let's kill COVID on this. Let's go last 2 years. No, don't really see a move on it. But remember, layoffs come later, right? So, what about new job? No. What about... I don't really know what else to search that could be like a leading tell. Warn notice? No. Yeah. No, then those are too leading. But yeah, anyway, thank you for asking about the Canadian search there. We made sure to jump into that. I was trying to help my dad with his IRA, and when he went to sell it for cash, it said 5.75% exit fee. Yeah, mutual funds can have exit fees. Yeah, not the biggest fan there. There's a house that is way overpriced, rather. Went under contract, then got put back on the market at the same price. Realtor stupid or what? I mean, every deal is case by case, right? Why do you need an advisor? Just look at comps. You'd be surprised how many people don't know how to look at real estate comps. Like, for example, let me just blow people's minds. Single family real estate, stop using cost per square foot. It's an office and commercial tool. And it's shocking how many people screw up valuations because they're using, cost per square foot. Do I think Supermicro is committing fraud? I don't know. I don't know. I think that oftentimes I think some of the Hindenburg narratives are a little overblown. They called Enphase a fraud at $30, and I'm like, I'm buying the dip on this. And then I thought I was a genius when I sold it at 60, or whatever it was back then. Now it's like 120. So, yeah, car prices are finally coming down. That's true. That is true. Yes, financial advisors are fiduciaries. Yeah. Yes, they are. Stock brokers have a best interest rule, but advisory services are fiduciaries. I guess we should add that to the website. I'm going to add that. I think that's a good idea. Thank you for that. Okay, let's listen to these folks for a moment.
I do believe that the way it might go is that without major changes, meaning that there has to be a change in the CEO, I don't think I think they like the whole board to change. I don't see any eye to eye here. Now, there is a kind of exciting roadmap. You have a September 26th Investor Day. You've got these changes going on, which is described as capacity discipline, and those are all really good. So it may be win-win. I'm not particularly in love with the autos here. I don't think...
Or the airlines?
I mean, the airlines.
Yep.
My worry about the airlines' capacity is that there's overall too much capacity. But I do think that most definitely there's a kind of interesting opportunity here to buy it.
Interesting. Well, at the same time, we have this downgrade of Boeing over at Wells, where they go to underweight. They trimmed to 119, Jim. They were at 185.
Boy, that was a devastating piece. Talking about cash flow. And I've been waiting for that piece. Everyone's been kind of just saying, don't worry, don't worry, don't worry. There's only two carriers. You're absolutely fine. Two planes.
No, this is interesting. The search for roommate. So why does it spike like now? September, and what was that spike in June? Is there like a movie? Worst roommate ever TV series. Oh, well, that's not useful. Inmate to roommate TV program. Okay, well, that kind of skews the data a little bit. Ay. Anyway, yeah, thank you for your comments on that, all everyone. Yeah, go check it out over. Oh, okay, somebody says, what did I miss? New company services you are offering now? Yeah, it's not really new company. We've had this, for a couple years now, but we never started custodying people's assets. So basically, it's stockhack.com, and it's wealth advising. So retirement planning, income planning, credit planning, tax planning, as it's incidental to an advisor, obviously. It's a fiduciary relationship. Rather than billing you hourly, it's just basically a flat fee. And then you've got, we can custody assets. We plan to partner tentatively with JP Morgan. So they would basically custody your assets, and then we can kind of work together with you if you want that. You don't actually have to custody assets if you don't want. What else? It's a consulting relationship that balances financial advice and real estate. So it's more than like, oh yeah, just invest in the S&P 500 and go away. It's like, how do we actually consult you to build wealth through taking together everything that just investing in an index fund doesn't tell you about. So that's what it is. So that's over at stockhack.com. So we're pretty excited about that. We're starting that October 1st. We've got an interest list there. So thanks for asking about that. So okay, all right, very well. All right. So no, you can't open links, but here's what my professor gave us to compare funds to analyze. Yeah, and so remember, there are funds like mutual funds or investment funds, right? Like an ETF is a fund, a mutual fund is a fund, a hedge fund is a fund. A wealth management service is different. You're not telling people, hey, invest in us because you're trying to beat the market. You're saying, hey, look, you can invest in treasuries and the S&P 500. We're just going to be your advisor to help you figure out, do we DCA this month? Do we buy the dip? Do we buy a car? Do we buy a house? Do we renovate our house, right? Like, it's all of the other stuff. That's what wealth advising is. It's not, oh yeah, here, we're going to invest this way to beat the market. That's not the goal. So, good questions, though. Good questions. So, somebody says, why is WTI tanking? Let's see what's going on. Okay. Yeah, that's interesting. Oil is tanking a bit, too. Oh, China manufacturing numbers came out. Well, that's not a surprise. I mean, The Economist has been yelling about China and recession for a while here. Well, manufacturing. They call it the manufacturing session or whatever they call it. Where can I get Chinese data? Bro. Fine, I will try a different way. China just says stocks fall before manufacturing data. Let's see here. I don't know. Corporate highlights. U.S. steel shares dropped 5.8% after Harris declared that the company should remain domestically owned. I want to know what's going on in China. Well, let's see here. CNBC's yapping about it. Okay, here we go. Still planning to increase oil production in October from OPEC+. Manufacturing in China, meanwhile, fell to a 6-month low in August, according to data released over the weekend. Ah, I see. Okay. That's it? Just that it's a 6-month low? All right. That's interesting. Yeah, Well, and there's something to consider about that. So, I'll write that down. So, China. Okay, what is this? Manufacturing fell to 6-month low in August. Now, contributing to oil's decline along with OPEC plus reiteration of production expansion in October. Okay, so there's a problem with China's manufacturing going to poopy doopy. This is just my take on this. Okay, so I'm gonna put this is my opinion, like I always do. I try to be very clear about like when something's my opinion and when something's sort of data. So the problem, I'm gonna write this down. The problem with Chinese manufacturing plummeting. Also, I want to pull up that Economist, manufacturing China bankruptcies. What was the title of that? China's manufacturers are going broke. And news outlets like The Economist suggesting Chinese manufacturers are going broke. There we go. The problem with this is simple. Is that manufacturers will dump Chinese manufacturing prices, leading to, how should we put it? Leading to, I'll call it substantial manufacturing disinflation or deflation in China. This is good for companies that manufacture in China, like frankly Tesla. You know, bulk of car manufacturing is in China. However, it makes every other factory that much less competitive around the world. Hence, Volkswagen potential plant shutdowns, and then that leads to joblessness in the developed countries, right? Which leads to joblessness in developed countries. So that then obviously weighs on the consumer, which weighs on consumer. So you're basically shifting labor. So think about, how should we phrase this? I think about it as a labor shift. The workers in China benefit, and in Germany, US, etc., lose. But also, the manufacturers in China, companies manufacturing in China win, others get hurt. So, for example, Chinese solar panels, think Chinese solar panels over German or whatever, right? Just as another example. So that's interesting. I think watching the sort of desperation in Chinese manufacturing is a big deal. Yeah, very, very big deal. Okay. Someone says, buy Apple, short Google. Somebody else says, blame Temu. Ouch. Yeah, but oil prices, I mean, this is a nice little dump here on oil prices, which should show up at the pump, honestly. It's kind of nice. Oh no, what is this? No. No. I just saw this. Tom Lee, who's been correctly bullish, turns cautious and sees 7 to 10% pullback. Equity strategist Tom Lee expects the stock market will run into some turbulence over the next 8 weeks. Well, I mean, I agree with that too. I think the buying opportunity is right before the election, unless there's a recession. or unless the recession has become a lot more clear. You know, no recession between now and election, even if the recession doesn't necessarily materialize now, but let's say we continue to get unrecessionary indicators. It'll be a nice buy the dip opportunity. Interesting.
Update of what they're saying, which is that they do believe that you raise the low end, but taking a 1.5 billion to 2.5 billion impairment charge on wine and spirits. Now, this is what's really interesting. Wine and spirits are declining even faster than people think. Beer is still good, but there's a sense that wine and spirits may be down 16 to 18%. We thought 9 to 11. Now, all the companies always deny that there's any GLP-1, although there's now a considerable number of people who want it. Some people say 12 million. Everyone denies that it has anything to do with cannabis. Some people say that the younger people gravitate toward beer and less toward wine and spirits, but it's really troubling if you're in that industry. And I know Brown Forman.
Now check out that cash for clunkers thing. Thanks.
I don't want to be in an industry that has whiskey or vodka or gin. Whiskey and vodka are very weak, and no one seems to want to own that. It's like the way of not owning Boeing. I mean, there's a lot of denial going on. But STC is coming out like Travel Trust.
Bit of an NVIDIA drop there in the open.
This is very, very good.
We'll catch up on that in a second. Let's get the opening bell here at the big board. Oil and gas company Vista celebrating its 5th listing anniversary at the NASDAQ. It's Danish biotech Genmab, specializing in antibody therapeutics. I can't get over that impairment, Jim. In legacy TV and now spirits.
No, I mean, there is a change. Now, again, I think that, like with when I mentioned that Meta's slower than and Perplexities are younger people.
Keep getting a drop here on NVIDIA. Looks like you're down about 3% right now on NVIDIA. I've got Affirm down about 1%. The Q's down about 0.72. Bit of a drop there at the open. Bitcoin following the market here. Not a surprise. Bitcoin's just been a trash leading indicator lately. Tesla don't give a flying F. It's going up. Tesla as I say that. Anyway, IWM down about 85 bips. You got that's a spike there if I've seen one on yields. That is rather the yields falling. So spike on some of those. Yeah, 10-year right now is down about 5.5. Wow, NVIDIA just tanked 4%. Holy smokes. Supermicro turning green. Bitcoin loses 59.
Lost the lead.
And still bobbing around here on the Qs. I mean, it's early in the day, you know, we can always get a nice big bounce here. So I was kind of like waiting to see what happens for a few minutes, get a trend on the day. Wow, look at Tesla. Holy crap. It literally in like one candlestick did an extra 1%. Now it's at 2%. DJT, let's look at DJ Tizzle. Oh, DJ Tizzle. Under $20 as people are worried about Trump's dumping.
Double reamed. Poopy doopy. L.
Okay, NVIDIA keeps going, now down about 4.2. Affirm's actually positive. Oh, Tesla, what is this? Geez, look at that volatility, man. Holy, that's crazy. Okay, Qs are now down 90 basis points. Ay. Listen over here for a moment.
Everybody know? I mean, I don't know where they are these days.
Are there changes afoot generationally in deodorant?
They sometimes are a little more free.
Tesla has big wick energy.
Well, I was going to say that's a classic recession chart.
Right, and that's what I worry about.
But then you look at like a Hershey, which would be another. It looks nothing like that.
They got squeezed on cocoa. Yeah. Colgate's this kind of perfect world because they've got the high-end pet food, which is nutrition, and they've got these kinds of things that people just spend for. I mean, dishwasher. You do not think to yourself, "Wow, I got to cut that out." I don't know. I washed the dishes last night. It was monumentally difficult.
It's your turn.
No, I despise it. I'm just on the record despise. You know, look, I make the bed. and I wash the dishes, and I hate them. Now, I got upbraided about how to put the dishes in the dishwasher the other day. Don't just, like, slam the plate down. So I said, heck with it. I'll, like, wash it myself. You know, dishwasher.
Apple just dumped a little bit. Take a look at this. Apple's now down 63 basis points, really dragging the Qs down here, down almost 1% on the Qs. Kind of keep trending down. Nvidia here, about 4.8 to the downside. Tesla, though, again, doesn't give a coop. Coop, I don't even know what a coop is, but it's up about to 218 here. My goodness, what a run there on Tesla. And let's see what else we have here. Wow. Redfin comes up 11%. Okay, that's interesting. You've got Space Mobile, 81 bips. What else here? PayPal's negative 14. What is that? 2x Bitcoin. Let's see here. Enphase down about 2%. Just lost that 119 line. AMD's down a little bit. Oh, AMD keeps dropping too. Russell trying to wait, hold on. IWM. Russell's trying to recover. A little bit of a recovery there on the Russ. Are the Qs trying to bottom out here? Yeah, Russell's recovering. Q's not really. Nvidia's trying to find a bottom, maybe. Tesla, look at that move, though. And, yeah, Trump Media keeps going. Supermicro's bouncing off the 430 line. A firm can't hold on to green there. It's trying. What a day. How are some of those lenders doing? Loan Depot? Oh, flat. Okay. It seems like the yields fell a bit here, but you haven't gotten much of a move on them yet. Oof, Qs just went down even more. Yikes. All right. Oh, yeah, 10-year yield's now down 6.3 bips. All right. Let's try. Oh, Nvidia's down 5% now. Wow. Let's try the Doomers. Let's see what the Doomers have.
Matters as much as the fact that the Fed is starting its rate cutting phase. And as we move into 2025, we expect another 75 basis points. And we think that all of that combined will start to help, especially the cyclical sectors, areas of the market that have been really beaten down during this period of high rates. As rates start to fall, we think things like small caps are also going to benefit.
I mean, it seems like it'll be helpful to the stock market, but I'm not sure about the underlying economy. There was a great piece in the New York Times this weekend by Gina Smilik pointing out that the housing market, for example, needs a lot more than rate cuts. The problem is high labor costs, high material costs. I'm thinking for the auto industry, it's the same problem. Aren't there some of these, cyclical, some of these industries that, need more government policy changes?
Bit of a recovery there on Nvidia, by the way.
That is possible in certain sectors like housing in particular. That is an area where we often do see fiscal policy stepping in to assist homeowners, home buyers, to assist builders. So it's possible that could be one of the factors. But really what we're seeing when rates do start to tick down is that more buyers are stepping into the market. And really the issue with the housing market as we see it is more one of supply and lack of turnover. So, lower rates are really going to start to loosen up the housing market. And that could be another positive component for the economy as a whole in 2025.
Tracy, I'd love to talk a little bit about what's been popular in the market lately, because even though you have seen that worry about where valuations are in the broader S&P 500, worries about where those high flyers really stand, after we've seen such a run-up this year, you've actually had the S&P equal weighted post 5 records in August. Why are there no valuation concerns there if you believe the economy is going to slow down?
Yeah.
Yeah, so what we see in terms of the macro, let's just start there, is more of a saucer-shaped growth pattern through the end of this year. So the economy's starting to slow, not dip into recession, and then starting to gradually improve in 2025.
Oh, okay.
That type of environment, we do think that cyclical assets, cyclical sectors could benefit and broaden out the positive returns that we've seen in the market so far this year.
And Tracy, it feels like one of the themes, at least of this morning, is known unknowns. When it comes to this week, of course, all the data events this month, and then looking over the course of the year. Obviously, we are just several months away from the U.S. election. How much of a downside risk is that for investors? How much does a long-term investor really need to be thinking about what happens in early November?
Yeah, so long-term investors don't really need to be focused on the day-to-day or the month-to-month choppiness that we see in markets. In fact, if you're dollar cost averaging in, that choppiness, those downturns are great opportunities to invest for the long term. But most investors are thinking about the nearer term, and they're thinking about the potential for some volatility around the elections. As we move into September, October, in an election year, that does tend to be a period of greater uncertainty because some unanswered questions start to come into view. Questions about fiscal policy, questions about trade policy. What's the likely path towards resolution of the debt ceiling in the first part of 2025? So all those things are going to start to play into the investor psyche as we move through these fall months.
All right, Tracy, always great to get your perspectives. Really appreciate you taking the time. That, of course, is Tracy McMillian of Wells Fargo Investment Institute. Now, coming up, Goldman Sachs abandons its bullish bet on copper. Details next. This is Bloomberg.
Oh, boy. All right, go back to Jimbo over here.
But Jim, as you and David both know, a lot of it comes down to experiences, parks.
Right.
We do have some of these striking workers at Hilton Hyatt Marriott.
I know. And there are just strikes. There are a lot of strikes going on, and we tend to ignore that there's strikes, and you can't. I mean, one of the things that I think that that Nichols is going to solve at Starbucks is going to solve the labor problem. You got to solve the labor problem. That's another thing. Balance sheet and labor. You have to have these things because one of the things why do people come back to Mag 7? You ever hear about balance sheet problems? Ever hear about labor problems? And the labor problems are they have to pay AI people $25 million, right? So it's better to just go buy, if you're AMD, go buy some company that has a lot of engineers. Right. Private company. Yeah. So, I mean, I look at this group and I think, Microsoft. What's the problem with Microsoft? Well, nothing. Like, I want to own something where nothing's the problem.
Except maybe regulatory friction, yeah?
I think the regulators are always willing to give them a pass. We crushed them in 2000. I mean, come on, it's like 24 years ago. That's the kind of thing that happens when you get older. You say, wow, you know what? I went to that restaurant. It was really good. When did you go last? Oh, 1985.
So you think it's like the cop that pulls you over and then he gives you a warning and lets you take off?
I do think it's like that. That's always a lucky thing.
Yes.
Hey, I'm going 78 on 78. I thought that was a speed limit. That was actually done by someone I know, whom I love, but don't get me wrong. I do think that, yeah. I don't know, Carl. I think that there's a lot of companies that are getting passes right now.
Yeah.
A lot of companies are being waved on.
On the media front, at least we get some NFL starting Thursday.
I know.
Yep. Chiefs,
and by
Ravens.
the way, Peacock game on Friday.
And that's an important game to you.
When I always see it's on NBC and Peacock. That does not make me feel that Peacock's good.
Ay. All right, folks. Jeez Louise. Let's figure out what's going on out here. It looks like Apple has now doubled its decline from about 60 basis points to about 110. 110 basis points down here at the toilet. Tesla's about to lose the lead. It's getting a nice little green candle right here, but it's given up a lot in just the last few minutes. You've got Nvidia. Looks like it's trying to bounce up a little bit here. So are the Qs. A little bit of a bounce. Let's see if that bounce can actually hold. Lately, any bounce that we've gotten for a minute or two has just turned into more selling pressure. So we'll see what happens here. It does look like TLT is doing nicely here, up 1.4, which is pretty big for TLT. Nvidia down 5.5%. It's really a remarkable decline, especially since this is now just another day of sort of selling pressure for Nvidia. Because if you zoom out after earnings, you had your sell down, another sell down, and then of course here we are again. Selling down even more. Now, it is recovering right now, so we'll see if it can hold. You got data coming out in about 15 minutes, so we'll cover that. Looks like, to me, data. We've got, in about 1 minute, you do have S&P Global U.S. Manufacturing, so we'll get that data in just a moment here. We'll see what we get here. And let's see here. What else? Then we'll get ISMs at 7 a.m. So be watchful of both of those. Okay. So let's see here. Data comes out in about 10 seconds or so. Let's see what we get. I'm still watching Nvidia, as you can see here. But I'm going to hop over to the Qs for a moment and just see what... Okay, it comes in a little weaker than expected. 47.9 versus the 48. That is in contractionary territory. S&P Global U.S. Manufacturing, slightly worse than expected. Not a surprise to see manufacturing really start slumping. And I think that slump will continue as you get more and more pressure out of China, frankly. So it's not fantastic. Now let's look at this as a broader chart for a moment, if we can. Let's do this. S&P Global U.S. Manufacturing PMI chart. Let's see if I can get sort of a monthly manufacturing chart on that. Producer, I don't know if I can. I'd like to get an easy S&P Global PMIs. Oh, hopefully they just give me a chart. No, they don't. Oh, here we go. ISM manufacturing. No, but we need S&P. ISM doesn't come out yet. Okay, I'll keep digging around for it. Let's listen in here.
Probably the best run plant in the world.
And the German union.
Q's just dropped a little bit more.
Say about a closure.
Oh my! The German union, they're going to have to go back. They're going to ask for the moon, and they may get it. I don't know. Look, we sold the Ford. We gave up.
You did.
Yeah, and that was on warranty issues. And anyone who's bought a Ford in the last few years, I mean, you're always afraid of a notice. I got it for my Maverick, and my wife took it in, and it caused tremendous bad will in our family. So that was enough. No, but I do think that Ford is challenged because they didn't buy back stock. And that, even though I guess Bill Ford doesn't want that, I'm taking the Bill Ford at General Atlantic over the Bill Ford at Ford.
We'll keep our eye on that as we await some auto sales.
Got it. Right here. Take a look at this. U.S. manufacturing PMI. We've got growth since previous month. You've really been bobbing back under it over here on the right side just recently. So not great because we broke out of it and now we're breaking down again. Oh, now they're covering this. Just now?
Right here. With yields, anyone who looks at bonds goes and buys right now. They buy equities.
Based on this
PMI? Yeah. I think that now people are going to say, well, did I just get my chance? Or there'll be people who say, look, I want to buy Coca-Cola and PepsiCo. I want to buy Procter on this slowdown. I think that you can buy the MAG. This is a really good number for equities because it says the Fed maybe has to cut twice. And that cut twice is nirvana for people now.
Yes, the recessionary data is really good because the Fed will have to cut more. No!
And Boeing that are doing quite well. I mean, we have very contained area of companies doing poorly.
Right. It is the first contraction in several months. And to Jim's point, as we go to break, check out bonds. You will see that 10-year yield coming off of.
United Health is a good proxy of that 10-year.
Tesla just lost the lead.
Lost the lead.
We do get some Fed speak this week. Mester already on the tape, but Friday's the last day before the blackout. We're back in a minute.
Oh, a lot of volatility today, huh? Let's go to the doomers. Next data set's in about 12 minutes.
The stock market to stay up. Otherwise, the commodities can do what they normally do, get cheap.
Well, we know the Fed is going to cut soon, TBD when it comes to fast, but I want to compare and contrast copper to gold here, because the second part of Goldman's call was that basically gold is standing out as the commodity where they have the highest confidence in near-term upside, saying that that's the preferred hedge when it comes to geopolitical and financial risk. Does that argument hold water with you?
Oh, absolutely. It's good to see them coming around to the view we pointed out a few years ago. But the key thing about gold is almost always outperforms all the other commodities, particularly copper. But now that gold-copper ratio should continue higher. So on a one-year basis, gold is up about 30%. It's beating the S&P 500. It's definitely beating copper, and the Bloomberg Commodity Index is down about 5%. That's a global recessionary trajectory from commodities, and I don't see what stops it. What's one of the biggest buyers of gold? It's been China. Why? Because China's heavily in decline, and we see that their investment options are declining.
Well, Mike, really appreciate your perspective. That is Mike McGlone of Bloomberg Intelligence joining us.
Kevin, if we tank from here, what's the average time to recovery? Oh, well, I mean, it really depends. I mean, it's an election year, so it's so hard to say. You know, look, if September and October are tank, and you don't get recessionary data, you know, by the election, I think it's a buy the dip. I turn really bullish, and it's kind of what I've been waiting for. You know, it's like, give me a big fat dip before the election, because it's like it's the most predictable dip ever. So you dip before the election, and then right after the election it U-turns. So not always, but just average. So basically, if you get a dip the next 2 months, you recover by Thanksgiving. Okay, well, that's great. Well, what if you know, what if you do start pricing in a recession? Well, you know, then unfortunately, absent COVID, dips can suck. They could last anywhere from, you know, 2.5 years, what we saw during the dot-com bubble. I don't think we would see it take that long, to 9 months, like what we saw in 2008. I would probably say, even though this cycle is very similar to sort of the dot-com bubble, I think that we would have more of an 2008 style time frame, mostly because everything happens so much faster today. Because of technology and you know how quickly people just can dump shares or buy shares or whatever. That's just a thesis I have, though. But really, COVID is this anomaly in terms of how quickly we Larry Kudlow'd V-shaped recovered out. So, you know, my thesis has just been, if you're trying to macro trade, which that's not for everybody, right? VOO chill is fine too. But if you're trying to macro trade, I've been a fan right now of some bonds. I know that sounds so boring. Mortgage companies, you know, and cash. So, but I'm not such a big fan of like the Mag 7 thinking, oh, we're gonna get to, you know, new all-time highs again. And I don't know about that. All right, so what do we got over here? What are they yapping about? Coming up, Steph Curry's coming up on Squawk. Why? Okay, you're just gonna play music. You were just on commercial. And you just went back to commercial. Losers. Okay. Fine. I'm gonna have to go to the Varns, aren't I? Oh, I guess I can listen in here.
Catherine Doherty.
I was about to pull out Fox.
And they've made a lot of investments into new areas of trading. What's helping them catch up most with the big Wall Street giants?
So, number one thing, volumes. We saw the big U.S. banks when they reported their first half of the year. Everyone was up. For them, it was 18%. For Citadel and Jane Street, we're seeing a significant jump from a year ago. But I'll also say that last year was a pullback from the year prior. So you see ebbs and flows, but overall across Wall Street, there's just record volumes that we're hitting, and we will be looking to see if the second half of the year is continuing this momentum. But from the looks of how we're starting today and going into the rest of, or to end 2024, it could be that they are notching another record compared to what would be 2022, which was their last record.
Now, by the way, what we're talking about is the money these hedge funds are making for themselves, right?
Market makers.
Market makers, not the hedge fund
Or market
units.
makers, but so it's just the revenue that they're bringing in. It's not that they're doing well in terms of portfolios.
They're not making any bets. They're basically facilitating the trades for institutional and retail investors that are looking to buy into securities, ETFs. For Citadel Securities, they've recently entered into corporate bond trading. For Jane Street, they had already been quite dominant in this space.
There is so much money in market making. It's insane.
ETFs, they extended into fixed income. It was a natural expansion for them.
And of course, there's Citadel Securities, which is the market maker, and then you have Citadel, the hedge fund, which is making those big bets. And it's interesting, when you focus on Jane Street, we talk about Citadel all the time. Jane Street seems more secretive, but they did sell a $1.4 billion high-yield bond deal earlier this year, and I feel like that offered an interesting peek into maybe some of their financials, which we haven't really seen before. And it was interesting, I mean, how much of their business, how big and important they are when it comes to the ETF industry in particular.
Absolutely. They are the behemoth in that space. But what's also interesting is because they've been so dominant in ETFs, as I just mentioned, they were able to naturally expand to other asset classes. So
Nvidia's going back down to 6%. Wow, the Qs are down at 1.3 now. Holy smokes. 1.45 on Apple.
Now it just will be the question of how do they continue this expansion? Is it global expansion? Are they going to look at other asset classes or fine-tune what they're already market making in?
And a fun fact, Citadel Securities had a new executive from Goldman just started days ago, Jim Esposito. So a lot of rumors out there about how soon they'll go public, right? I mean, this is an interesting time to be notching record highs, Katie.
That would certainly be something, definitely one to keep an eye on. That would keep Catherine Doherty to my left very busy. Great to see you, of course, on the first trading day of September. That is Catherine Doherty. Meanwhile, let's take a look at these markets right now. We are open and we are to the downside. You take a look at the markets, of course, the S&P 500 currently down about 1%. The NASDAQ 100 down 1.4% at the moment. So big tech is your big loser because you train your eyes on the Russell 2000 off by about 1% or so. Of course, this all feels very TBD until we start to get some of that economic data that we've been talking about. But I will say volume is back in a big way.
5 minutes to more data.
Matt, currently we're 17% higher in terms of trading volume than the past average of the past 20-day average.
All right, very interesting fun fact there, Katie. Let's get to the trading diary. What you need to be watching this week. We get ISM manufacturing data at the top of the hour. So that's just 4 minutes from now. Tomorrow we get earnings from Dick's Sporting Goods, Dollar Tree, and Couche-Tard. But probably more importantly, we get the JOLTS data. And less importantly, the Fed Beige Book. On Thursday, we have Broadcom earnings, but more importantly, and most importantly, you get the jobless claims on Thursday. And then on Friday, the big event of the labor market data, the U.S. jobs report comes out. So we get tomorrow, JOLTS, Thursday, jobless, and then Friday, jobs.
It's like a bunch of appetizers to just get us really excited for Friday's jobs report.
All right, let's jump in over here. And then we got data in 4 minutes.
It's like, the Eagles on Friday are betting the Eagles at Sphere. Although, then again, you got to run scared because Green Bay is an exciting team.
Yes, not competitive in any sense.
No.
Jim, we'll see you tonight, Mad Money, 6 p.m. Eastern. When we come back, speaking of pro legends.
All right. Let's see. This is interesting. So we got Tesla's now down 0.25%. You've got Nvidia trending down again at 0.55 to the downside. That's quite a bit, honestly. The Qs and Do's dropping even more right now, 1.37. And then IWM, which is your Russell Smalls, they're sitting at about 109 to the downside here. So definitely some pain, but could just be some normal volatility as we expect some more data here. So big data coming out in terms of construction spending, manufacturing, prices paid, new orders, and employment. So construction spending and then the ISM data, all coming out within the next, frankly, 3 minutes here. So you know, maybe the suits will get to front run us, and they'll get the data before us again, just like we had with that jobs data. What was it? No, what was it? Oh, the revisions report. That's what it was. Yeah, that was a little bit of a faux pas there that pissed a lot of people off, rightfully so. I remember when we were watching it come out at 7, like nothing was happening. Everybody's like, "Where's the data?" And then all of a sudden, like 7:05, you see a bunch of like crazy candlesticks go all over the place. It was wild. There was some real enthusiasm. It's like, all right, who leaked the news? Who leaked? It's kind of entertaining. So anyway, I guess we'll find out. Data out in just a moment now. We are now sitting, within a minute here of data? 1 minute remains. 1 minute remains for the data. Data. All right, here we go. Bum, 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 bum. 1 minute, 1 minute. It's actually interesting to see the Q's slightly green candlestick right before the data. You'd think it'd be a little bit more concerned right before the data. Not necessarily, though. Okay, so we're about 30 seconds away. Again, well, okay, so just to give you a preview here, it's that you have construction spending expected to be 0.1%. ISM manufacturing expected to be 47.5, so that is contractionary. And then you've got prices paid expected to be 52, which is expanding prices, which is inflationary. So ideally, best case scenario, you get stronger manufacturing and you get weaker prices paid. Okay? Ready? Ready, Freddy. Here it is. And construction spending comes in at negative 0.3, which is well worse than expected. Negative 0.3. Then you get ISM manufacturing coming at 47.2, which is weaker. And prices paid come in hotter than expected. That's bad. So you get prices paid of 54, manufacturing that misses, and spending that misses. And then new orders and employment well in contraction as well. So those numbers not exactly ideal, not great at all. I think you've got, how should I put it, data here that basically implies oopsie doopsies. But this is the exact opposite of what I just suggested would be good, which is you want lower prices paid and higher manufacturing. But what you actually got is you had higher prices paid and lower manufacturing. So not great, I will say. A little poopy doopy. Hit that poopy doopy button.
Poopy doopy.
Yeah, it is. Let's see. I don't even think they're covering it yet, honestly. I haven't seen this sort of breaking news bar on CM to Sis. But interesting. So, hey, Sarah's out, though.
Shares crossing the threshold that allows the hedge fund to call a special meeting at the carrier. Speaking of, Boeing's also under pressure. Wells Fargo warning shares could plummet more than 30%, downgrade the name to underweight. And then watching energy, kicking off September, as I mentioned, in the red, second straight month of losses. And WTI and Brent crude both down double digits in 2 months. Also want to hit shares of Super Micro. They are rallying right now. The company's CEO issuing a letter to customers and partners about the delay of its annual report and reports of Hindenburg's short position. Remember this drama? Super Micro saying its liquid-cooled solutions continue to ramp, that it will address Hindenburg's allegations in due course, giving the stock a little bit of a bump up 3.5%. What's coming, though, Carl, is a lot of economic data, and it's going to be capped off on Friday by the biggest of them all, which is the jobs report. Jobs reports are always our Super Bowl, but this one is even bigger. Why? Because there's still some probability in the market that the Fed, at its first move in September, cuts.
Wow, yields right now down 7.8% on the 10-year.
What will determine that? If there's more weakness in the jobs report or in the labor economy, then
Tesla looks like it's bottoming out, and actually so do the Qs and Nvidia. Bit of a rotation now. Take a look at this. Apple bottomed about 10 minutes ago. The Qs really bottomed on the data and then bounced off the data. Nvidia bounced off the data as well, which is interesting. Loan Depot's up 2%. TLT up 183. Rocket's up 168. United Wholesale was up like 3%, I think, on Friday, if I remember correctly. Down about 30 basis points now. Tesla back to about 0.5%. Affirm's up just over 0.5%. And Supermicro keeps bouncing off 430. I've seen it bounce multiple times now at 430, so watch 430. And Bitcoin almost under 58 here.
B of A still at 200. Morgan Stanley 185, and we do have some fresh data just crossing the tape right now, and that's ISM Manufacturing 47.2 versus expectations of 47.9. Anything above 42.5 does indicate expansion, while monthly construction spending came down in 0.3 versus expectations of 0.1. I was just looking at some of the internals on the ISM. Employment actually beat at 46. We're looking for something around 44.
Yeah, but that overall manufacturing number is weaker than expected. And it follows, I don't know if you saw on Saturday, the China number, which was weaker than expected on manufacturing, which may be why some of the commodities are under pressure today, like oil prices, copper, we're seeing a big sell-off there, and silver as well. The 49.1 PMI was weaker than the July number. The other thing that's happening abroad, worth mentioning, playing in, is that the Japanese yen is stronger again, right? That's always a worry signal after the Bank of Japan Governor Ueda made it pretty clear overnight that even despite all the market turmoil related to the unwind of the carry trade, they're going to continue to raise rates if they feel like they have to do that if inflation continues to come in firm. And it's hard to know what's left of that, carry trade unwind and how much more damage it can cause after we saw that happen in August. But it's never a good sign for risk appetite if you're seeing a 1% move higher in the Japanese yen. And that's what we're seeing right now.
Right. Mike Wilson had a great chart this morning looking at, in his words, how the S&P is sort of trading on its own relative to yen, cyclicals, defensives, the 2-year, commodities, to one of the worst days of the year today. As we continue to look at growth prospects, Dow's down 450 points on some of these data points.
And what's rallying is defensives like healthcare and staples, which is sort of a more recessionary type playbook as the growth scare continues. Now, the upside of a growth scare, Carl, is that the market eventually talks itself into more rate cuts. And we still have 100 priced in before the end of the year. So the risk there is that's too much given that the growth numbers are not coming in all that bad relative to Fed expectations. How about some of the, there were a lot of consumer companies that reported last week. And so we aggregated some of the quotes just to figure out what's going on, because there's this feeling that what we're getting from companies, the micro narrative, is worse than the hard data that we're getting on the economy. So I picked out a few just to give a snapshot. Best Buy, for instance, was better. We see a consumer who is seeking value in sales events and is also willing to spend on high price point products when they need to or when there's new compelling technology. Birkenstock, how about that one? I mean, a lot of this speaks to the execution of these companies, but Birkenstock has not seen any consumer spending softness or anything like that. Burlington, as inflation has moderated, the situation for lower income shoppers has somewhat improved. So all of these actually are a little bit better. Dollar General, from a monthly cadence perspective, same-store sales growth was strongest in June before turning negative in July. I thought this was interesting. Notably, the 3 softest comp sales weeks of the quarter were the last week of each calendar month. That pattern suggests that our customers are less able to stretch their budgets through the end of the month. And then finally, Ulta Beauty coming back to earth in terms of beauty trends, saying, while the beauty category remains resilient, growth is normalizing after 3 years of unprecedented gains. Consumer behavior is starting to shift as consumers increasingly focus on value and becoming more cautious on their spending. So there's that value word again. It's kind of the word of all the consumer companies, but it's not all bad news in terms of any kind of fall off in consumer spending.
Okay.
Which is
Well, that was very entertaining. Okay, cool. So I had a little option play this morning that was ironically up 69%, which is cool. So close that out. As always, anytime I see a trend and I think it's tradable, I can't guarantee it. Past performance doesn't guarantee future results, but I send those alerts to everybody in the Stocks and Psych group. This morning I sent out a contract at 175. I closed it at 296, up about 69%. So if you want to see those, at least to get perspective or kind of see, okay, where's Kevin looking? Where does he see a trend? Do I agree with that trend or not? Check it out. We've got the Labor Day week sale doesn't end until Friday, so you've got a few days if you want to check that out. Go to meetkevin.com to learn about that. If you want to bundle up, go to staff@me or email staff@meetkevin.com. if you are interested in the Stock Hack Financial Advisory Service. That's, you know, where we help you allocate between index funds, between real estate, planning your wealth, planning your retirement. Make sure to go to stockhack.com, fill out that interest list button if you are indeed interested after you check out that website. We would be a fiduciary of yours, no hourly billing. It's just flat fee based, which is super convenient. Go check that out over at stockhack.com. That launches October 1st. We'll probably be in touch before that to start getting paperwork rocking and rolling, especially with our partner bank, likely to be JP Morgan, for custodying assets. So we're really excited. Hopefully you are as well. Anyway, thank you so much for being here. I love you all. I'll be back later. We've got a bunch of videos to make today. And with that, I'm going to go get some breakfast because I am starving after the kick-ass time we had this weekend at the Kalahari Resort with the kids. Really, have to say, I was not expecting it. We really think, like, we went there with really low expectations because we were kind of reading some Yelp reviews and we're like, nah, this is going to be, I don't know, like, let's go there with, like, super, super low expectations. It actually ended up being fantastic. We really enjoyed it. Have to say, one of the funnest parts, if you've never been on one, I encourage you to check it out. You got to go in those, where they call them rope courses, and you kind of tether in, and I feel like they're like RuneScape agility quests. Here's Jack literally hanging out on one of those rope courses where you're tethered in, and then you kind of get to walk across and sort of practice your agility in that. I think that's really cool. So we had a great time. Anyway, thank you so much. Again, go to meetkevin.com. Got until Friday. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Woo! TMF. Nice. All right, folks. Love you all. We'll see you soon. Goodbye.